Hello everybody and welcome back. Today I want to talk to you about a topic that I've been wanting to talk to you guys for a while about, but I wanted the board. So I got the board, so without further ado, let's get to it. Today's topic is going to be investing versus trading. Is there a difference? It's a good question. Is there a difference? Yeah, there's a difference. There's a pretty big difference. To me, investing is when you invest for at least, so a minimum of 1 year to 5 years. This is minimum, guys. Remember, minimum. So 1 year to 5 years. Preferably 5 years to infinity. 5 years to infinity. Forever, guys. Honestly, if you pick a good stock, 1 to 5 years investing is nothing. You want 1 to 5 years to 100. Honestly, 100 years minimum. Okay, not minimum because you want to take all your money, you want to enjoy your life. But I'm just saying investing is at least 1 year, bare minimum, preferably 5 years or more. That's investing for you. Now, normally with investing, you don't need big capital. You don't. But with trading, you need big capital. Now, why is this? Why do you need big capital? Because in trading, your trade may only be 5 minutes, guys. 5 whole minutes. Or it could be 1 hour. Or it could be 1 day. It could be really anything when you're trading. It could be absolutely anything. In my opinion, trading is anything really less than 1 year. Anything less. I mean anything. I mean a day, an hour, a month, a week, 11 months, 10 months. That's trading. Trading is within a year, you're going to buy, you're going to sell your position. Some people are day traders and they trade every hour, every 2 hours, every 3 hours. Honestly, guys, it's crazy. That's one of the main differences. Now, why do you need big capital for investing like that? Why? Why do you need big capital? Well, once I erase all this, I will definitely show you. Why do you need big capital? Okay, say you buy a stock at $50. Stock is trading at $50. You want big capital because you need a small move. Like, realistically, if you're going to be a day trader, the stock isn't probably going to jump 100% in 2 minutes. That's just probably not going to happen. It could happen, but it's very rare. And if you live off of day trading like that, chances are you're not going to be a day trader for very long because either you're going to lose a lot of money or you're not going to make very many trades, possibly never make a trade, which if you're a day trader, you obviously want to live up to your name and make a trade in a day, right? So $50 is the stock. Now, you're going to say you want to buy 1,000 shares. So you buy 1,000. 50 times 1,000 is $50,000. You see where big capital comes into play? Now say the stock goes up $1. That's it, just $1. 2%, which is $1. So the stock goes up $1. Okay? Now you own 1,000 shares, so 1,000 times 1. This is your profit right here, guys. You make $1,000. Not bad for possibly 5 minutes, 10 minutes, an hour, a day. $1,000. But you see, you could do this a couple ways. See, if you only had 100 shares, well then you would only actually invest, say, $5,000. This comma makes it look a little crazy. So you would only have invested $5,000. So you have $50, you have 100 shares, cost you $5,000. It still goes up $1. However, you need to get rid of this because you're only going to make now $100. To some people that's great, to some people that's terrible, depending on what your goals are as a trader. I'll talk about that in another video. You should have goals as a trader. If that's your goal, congratulations, you're $100 richer. If you want to make $1,000, well, then you have to invest $50,000. The thing about day trading is most people don't really know much about the stock they're buying. They kind of just buy it on news, on earnings, because that's what day traders live off of. On investing, you don't live off of this stuff. You really don't. Because on day trading, you rely on news. You rely on news, market fear, all that stuff. You want news. News is what's going to move the stock, and earnings. This is what is going to really move stocks, because this is what really moves stocks. As an investor, this stuff doesn't really matter, because if you're holding it for 5 years and some little bit of news came out that's not great, in 5 years no one's going to remember it. Realistically, no one, unless it's some pretty absolutely damning, life-changing news. No one's going to care. Honestly, it's just the truth. And earnings, well, earnings 5 years ago don't matter. Really, they don't. Earnings 3 months ago matter. Earnings a year ago matter. Earnings 5 years ago don't matter. Earnings 10 years ago don't matter. They're useless garbage. Get rid of them. I don't want to see them. Get that out of my face. But as an investor, you care about different things. You care about the balance sheet. That is probably the most important thing you want to look at. Is the company that you're going to put your hard-earned money into making you money and making money? That is a very good question. As a trader, you're probably not looking into that because you don't care about that. You care about the news and the earnings and anything else that's going to affect the stock on a day-to-day basis. Interest rates, maybe unemployment, what Donald Trump is currently saying on the news. That stuff is going to affect the stock market day to day. In the long run, if you hold a stock for 10 years, I don't know who's going to be the president in 10 years. That's not going to be the next president. It's going to be the president after that. Maybe it'll be Donald Trump. Actually, it won't be Donald Trump because even if he gets elected, in 10 years, he won't be able to run again. So it'll have to be at least a new president. Maybe that president's worse. Maybe that president's better. I don't know. I'm Canadian. Who knows? I got Trudeau. Anyways, so this is just a certain thing you want to look for. So the balance sheet is probably the number one thing. The next thing you really want to look at is earnings. Well, this kind of goes into the balance sheet, but you want to look at the earnings. Is the company still making money? Are they doing good? This, that. Maybe you want to look into dividends. Maybe you want to get paid to own the stock. Maybe you don't care about that stuff. Maybe you just want a growth stock that'll, make you money over time. So let me do a little example for you guys with a investing one. Now that you know all this stuff, say you pick your stock again, and say you pick your stock at $50 again, okay? And now say you're investing. So you get your stock at $50. Remember, with investing, you don't need a big capital. Say you get your stock at $50 and you want to buy 200 shares, okay? So you want to times that by 200, okay? So that's going to cost you around $10,000. Not the craziest investment ever, but a pretty decent sized chunk of change, not too bad. Now let's say you're a pretty good investor and you picked a pretty good stock because I got faith in you. And this stock goes up on average 10%. Okay, so let's just do a little bit here. Year 1, your stock's at $50. Year 2, you made 10%. 10% of 50 is $55. Year 3, you get another 10%. 10% on top of that is going to be $5.50. So now you're at $60.05. Let's go with year 4 here. Year 4 is going to get you to $66.05 and 50 cents actually. And then the next year, you're going to be at $73.20. Then on year 6, you're going to be at $80.52. So there you go. That's investing pretty much 101 for you. Now, I know you can kind of say, this isn't really year 1 and kind of change it up. This could technically be year 5 instead of year 6. Whatever, for argument's sake. Whatever. You bought it at the end of the year, so we'll count this as the next year. I don't really care. Maybe it's 5, maybe it's 6. Whatever. Anyways, so you made $30.52 per share because, well, 80.52 minus 50 is $30.52. So $30.52. How do you calculate how much money you made? I feel like I'm teaching math a little bit, but adding money is always fun. So $30. Wow, I suck. So $30.52 times your initial shares of 200 is gonna give you a grand total of $6,104. Should have put a dollar sign, but I'm not that smart. So $6,104 in about 5-6 years. Pretty good. On your total investment, that is a 61% gain. That's not bad, 61%. You know, the best thing about investing long term is compounding. Compounding is a beautiful thing. I will do a video probably just on compounding one day, but right now, this is as good as it's gonna get. So as you saw, on the year 1, you made $5, and towards the end, you were making around $7. That's pretty good. You went from $5 to $7. And later on, you get even more, not to mention if it pays dividends, you can reinvest it, maybe put it into like a drip account, meaning every time you get dividends, it kind of reinvests the dividends back in and you keep making that money and you keep adding stacks on stacks on stacks. That's the fun part of investing. Because let's be real, I want to be rich, you want to be rich, I want to be Warren Buffett, filthy rich, but I like to spend my money probably a little bit more crazy than he does. I like McDonald's, but I probably go for a combo. You know what I'm saying? Anyways, if you like this video, give it a thumbs up. If you didn't like this video, give it 2 thumbs up. Why not? And comment down below your thoughts and theories. This is just a little video on investing versus trading. If you don't know the difference, hopefully now you know. Basically, investing is long-term, looking into the future. Day trading is trading what's in front of you today, tomorrow, and kind of this week, this month. And going off of news that honestly won't matter in the future. Just, you know, any type of news, earnings, Twitter, wars, interest rates, markets, unemployment, all this kind of stuff. You do have to look into that stuff for long-term investing too, but you look into it more for day trading. On long-term investing, you want to just look into the company itself and not really the stuff you can't really look into, as in the future and all that other stuff, like what's going to happen in the future, who's going to be the president, who's wars and trade wars and all this other stuff. You can't know about that, but you want to look into the company and make sure that you set yourself up with the most solid company possible and that you set yourself up to succeed in the future. Hey, you heard it here first. Anyways, guys, until next time, see you later and have a great day.